The Bank of Canada holds its first meeting of the year on Wednesday, January the 18th. The Canadian dollar has been quite active heading into this news on a number of factors, including Bank of Canada anticipation, action relative to the US dollar, and action relative to the oil price. The Bank of Canada is likely to keep interest rates on hold at 0.5%. There's been a number of factors that could influence the Bank of Canada, but the most important one is that the Canadian economy continues to recover. Canadian jobs was very strong the last month. We've seen Canada go back from a trade deficit to a trade surplus. Purchasing manager report has been favorable. Housing starts were way above expectations. So overall, the recovery in the Canadian economy that the Bank of Canada had seen coming out of the dismal spring and the Alberta wildfires has continued, and we are still seeing Canada's economy picking up. So there's no reason for the Bank of Canada to cut interest rates at this point, which is a good thing because most of the world is starting to shift away from monetary stimulus and rate cuts towards rate increases. The big question for Canada in terms of rates is how many rates will we see out of the US this year? How much pressure could fall on the Bank of Canada to follow suit and raise rates to defend the currency? So far to date, Governor Paloz seems to be more than pleased to just let the Canadian dollar fluctuate and let it do most of the bank's adjustment work for it. So as we go forward now, it's looking like the U.S. is probably less likely to bring in as many rate hikes as people were thinking. The Street was expecting 4 to 5. The Fed is talking 2 to 3. It looks like the Fed is probably more realistic, especially considering we only had one U.S. rate hike last year. So based on that, where are we seeing the action in the Canadian dollar? We're seeing the loonie has started to rebound because the US dollar got very strong. It's starting to roll over. The loonie had been depressed, starting to recover. On top of that, crude oil price also starting to recover. So we're seeing this improvement in the loonie here. I'll start with US dollar CAD, which is back trading near 130. It had been weakening, of course, through much of 2016. It's recently put in a double top in December, up near 136, and it's been tailing off since then, falling to the bottom of this channel. It's really a wide channel here between about 130 and, as I noted, about 136. It's coming back close to the bottom of this. A rebound initial resistance around 132, then 133. On a downside break, next support about 128. For CAD US dollar, what that's showing is that our channel is more like 73.50 to up here about 77. Let's call it 77.25, where we see this Fibonacci cluster here. The loonie looks like it's completed a double bottom here and is starting to steadily recover. Nice bullish breakaway day here. Bullish engulfing candle is showing strong new interest coming in to the Canadian dollar. Why we're seeing the US dollar starting to crumble and the oil price is rallying again. And I just wanted to mention the loonie and the oil price. Something we'll see here, this pink line here is the value of the Canadian dollar against the US. This is CAD US dollar. This is WTI US dollar. So what do we see here? We've had this huge rally in crude oil into the end of the year, from about mid-November to about the end of December, and the loonie really did not participate in that. We can see prior to that there were points where the loonie and the oil price were reasonably even, but the loonie's really been underperforming lately, so it does have room to catch up to the gains made by the oil price. So when we look to the Bank of Canada on Wednesday, it's less likely to be about the decision, more likely to be about the statement. What are they saying in terms of interest rates? What are they saying in terms of the economy that could potentially influence trading in the loonie on Wednesday and through to the end of the week?